Welcome back to F.A.C.E, Anthony.
Can you hear me?
Got you loud and clear.
Oh, great.
All right, so what you have to do is hover your mouse over a drop-down menu. You'll see a green box that says Share.
Green box, share screen, and let's see. Must be this one, screen one. Oops.
There you go.
Getting flicker on my video.
Coming up. All right, so
here we are.
Looking at the SPX. How long's it been, Anthony? Were you here?
It's been a long time. Well, I got kicked off Twitter for I was trolled and called somebody a politically incorrect name, and then they have no customer support over there.
Yeah.
So I ended up just blogging and doing something different for a while. It took me like 2 months to figure out how to get back on there.
Social media are nowadays filled with snowflakes.
Oh yeah.
Yeah, it's amazing. And I mean, I'm 100% with disagreeing with anybody, but the idea of banning somebody because, you don't agree with them, as long as, they keep it civil, I really don't understand it.
Yeah. What is this? Stalin running Twitter or what? Anyway,
well, I spent a lot of time there supporting Trump, and that gets me, it's a lot of trolling and
yeah.
And a lot of political blogs, and just, I say things people don't like, and I understand that. But
I do that. Every day I say things people don't like. It's almost like my calling. So
right.
Anyway, all right. So let's get to the S&Ps, and you're looking at technical breakouts. So the question here is, and we're getting some nice up moves here today.
Yeah.
You looking for a continuation of a bear market rally, or how are you looking to play this S&P?
I believe we're going to come back and backfill. This is just the beginning of a pullback. Today we see the market filling the gap, and because it's holiday trading this week, I think nobody wants to get short.
Okay.
And I think traders knew that when they drove futures up. So we're seeing some retail shorts trapped if they got short into the weekend, which usually isn't a good idea.
Yeah, and because it has been working. You know what is interesting, and I'm going to start looking at this because you're using the spot. It is a SPX daily. You're showing gaps. So if I use just a CFD or whatever, I don't see the gaps. So
that gap off the bottom was
almost like an island. So
yeah.
So backing and filling.
I think
new
just
lows
a pullback.
coming.
I think a pullback and then higher, possibly right after the holidays. But it's hard to see how it pulls back if no one's going to be going short into the holidays. So it could be a little while.
Yeah. So maybe
a huge move. What do they call it? The biggest rally since 1933.
Yeah.
So I don't see anybody in a hurry to chase this.
Okay. One thing that's bothering me is, Google search over the last couple of weeks. One of the big searches has been how to buy stocks. That it's, this is a once in a lifetime buying opportunity. So I think there's going to be a retest of the low, maybe even a marginal new low. Your work telling you anything like that?
Not really. I think that tail, the hammer coming off. Well, it wasn't a hammer. It's difficult to say, but I don't think we're going to retest the low. I think we're already off support, and
all right. The beginning of a new bull market that could propel it to new highs.
It could. With all the Fed's not going to raise rates again. They learned their lesson, I think, and I don't think it ends well because we could go into hyperinflation. But we're at least going to fix this market, I think. Don't fight the Fed, they say.
Okay.
But money managers haven't even gotten their land legs back yet. This rally off the bottom was just a technical breakout, and traders trading high volatility and just a snapback. But I think until the VIX comes down and things get back to normalcy, then you're going to start seeing money put back to work.
All right, where do you think people are going to start feeling more comfortable with vol levels? Back under 30,
Below 20.
20. Okay, so the
So we got
VIX
a long
has
way to
some work.
go.
Yeah, VIX has some work to do
Oh
to get to
yeah.
under 20. I mean, we could be at 2,900 by the time the VIX is under 20,
Oh yeah.
and that's
3,000
when
even.
people will come in. They'll feel
Yeah.
comfortable after a 700 handle rally and the
Yeah, they'll
S&P.
see it as more, less volatility and a recovery from this coronavirus
Okay.
story.
Okay. I could tell by the way you say story that you have some ideas about it, but what else market-wise is on your
Well,
radar or
this
future?
chart I wanted to show that the market was taken down on OPEX, and I had called the top using the DAX.
So what is OPEX?
Options expiration,
Oh, okay.
and this is I'm all about like options expiration dates when picking targets and picking tops.
You look for like high open interest contracts to give you a
No, I
tell
don't
or
do that. I just go by dates and just like and also holidays. So like this week, not expecting much, not expecting anybody to come in short oil or anything else. We could maybe see gold be taken down.
why? Why I'm doing it.
Because it's easy, because it's low volume, and
Oh, okay.
it'd be a good opportunity.
For a bear rate in gold?
Yeah.
Well, what do you make out of it? I know you follow things. The fact that people are willing to pay in the physical market $4 over silver, $4 over spot, to take from a coin from a bullion dealer, and $150 or so over spot for gold. Is that bullish to you, or is that the public lining up to buy metals? What do you think?
I'm not really sure about that. It's again, we know J.P. Morgan has been manipulating gold for years.
Yeah.
The racketeers. If you search Google search J.P. Morgan racketeers gold, you find. I
The
think
paper
that caused
market.
the short squeeze in gold that we recently saw.
Okay.
And
All right.
but I think J.P. Morgan, they're part of the Fed, and they know gold is the enemy of the dollar.
Okay. Do you follow commitment of traders reports for Qs at
No,
all? Me
no, I
either.
don't.
Because everyone tries to be the commercials, and the only problem with being the commercial is they're richer than me. They have, their
Yeah.
pockets are so much deeper.
Oh yeah.
They could, be wrong for a long time and still be okay.
Well, this is
Uh,
true.
yeah. Okay.
Nigerian brothers follow like what's the smart money doing, but and they'll go buy options that way.
Yeah.
And if they see somebody buying a lot of like Boeing, for instance, they'll jump on board, which isn't a bad strategy.
Yeah. They look for size coming in, and
Mm-hmm.
I do think though you have to grow a ponytail to trade their methodology.
I think we won't be a problem since we can't find a place to cut our hair
a
now.
barber. Yeah,
Mine's getting pretty long.
I'm working on the Nigerian tail here. So
yeah.
anyway, okay. So I called this a megaphone here in
Yeah.
this broadening top. This is DAX. Okay,
And this
go
is
ahead.
Germany, yeah,
Yeah.
and I warned everybody Italy was going to collapse and all this for months, and well, especially Germany's on the hook for Italy, Greece, Portugal, Spain, all the pigs,
Right.
which they don't use that acronym anymore because that's also offensive. I mean, that's offensive, I guess,
Well,
to some people, but
it's not kosher.
it's right.
Unless the rabbi spits on it. So anyway, all right. So
but that's
Europe in
the
more
real.
trouble.
I believe that's the real reason the market was taken down.
Yeah.
And I have conspiracy theories about this virus.
Yeah.
Was it used? Was it planted? We got U.S. blaming China and China blaming the U.S. and Bill Gates coming out and pushing vaccines. I mean, it solves a lot of agendas, including global governance. And I mean, the rabbit hole goes deep. But if they wanted to do this in order to take the bankrupt European companies or countries down and get Germany to capitulate, which they have, they're on the hook for that Italian debt. And this all, I remember they talked about a lot about this towards the end of the crash in '08, and then it kind of they quit reporting it.
Okay.
But it's still a factor. All that, like all the derivatives on Deutsche Bank's balance sheet, and even J.P. Morgan. I mean, the banks are still toxic, and we saw what happened to the banking sector in this crash.
It led it. So, and part of it is yields. You have any feel? I know you follow like TLT or anything on the interest rate front that is
the TLT,
giving you any messages?
Yeah, I'm seeing a rally in the bear TLT. See, this is the public charts area.
TBT.
TBT now.
TBT is the bear, right?
Oh, let's see. I've got it right here.
That's all right. You just show what you brought to show.
T-bill, it's the 20-year Treasury short.
Okay.
And it's pulled back. It went a little lower even after this hammer. You see, I mean, I think it's going to break out here. I think
that's the most contrarian call on the board, I think, to be looking for higher rates, because so many CNBC guys have been talking about a 0 or lower on the 10-year, and you're looking for the opposite here, like me.
Well, the short-term bonds look terrible, and I mean, I wouldn't touch that market. But these longer-term, I think this is going to stabilize or come down. I don't know if that. I suppose that does mean higher rates, right?
Okay. Yeah.
How does this affect gold? Does gold also come down, you think?
Yeah. Well, I've heard shy girls say everything's about yields. So if yields went up, it could, because that cuts into the opportunity cost. It costs you money to hold gold. I don't know if I don't know if 1% or 2%
That's Bitcoin's
our
argument.
It. Yeah. Okay.
Because it doesn't cost anything to hold Bitcoin. I mean, that's the argument those guys make.
Okay. What do you think of cryptos? I haven't talked to you for a while. A lot of people also thought that it would be a negative corollary, a risk-off hedge, and it certainly wasn't that. It went down with the market.
So I think that's the enemy of the Fed too. They're going to do anything to protect the dollar and the petrodollar. I mean, we made this deal with Saudi Arabia in the 70s. Probably a lot of people don't know that when we went off the gold standard, that we would protect Saudi Arabia, buy their oil. They would buy our treasuries and our debt. And that's been going on for 50 years.
And price oil in dollars only.
Yeah, exactly.
That's really the peg, right? So I mean, that's what makes it a petrodollar. So,
and
go ahead.
Like Gaddafi threatened to trade
he wanted euros,
oil and gold.
Yeah, that was,
and they immediately took him out.
Yeah, I think Saddam too. I mean, the hegemony.
Oh yeah, it's all right.
Yeah, hegemony has driven policy to protect the hegemony of the dollar. So, okay.
I think this all kind of leads to they're talking about the oil war with Russia. I think it leads to a real war. I mean, that would help oil. That would save the petrodollar.
Who's it? Are you talking about a WW3?
Yeah, probably. I mean, this is what happened after this was kind of what caused World War I and II, hyperinflation in Germany, and the economic collapse, and then the blame game. And I mean, even World War II, after the Great Depression, plus Germany was still hurting. So yeah, I kind of see that long term. Like short term, I'm bullish and think we're going to see a big rally and possibly even new highs in the market.
Okay.
With this chart, I just wanted to point out that this was taken down. It held up until OPEX. We knew about coronavirus and what was going on in China, and we did. And people were like, "Well, why is the market rallying?" Even Bloomberg was asking.
I was asking.
OPEX. We saw the VIX are sold for weeks, and it held up above the previous low, but they loaded up on puts for a long time, and then they took the market down. I get charts. I can show you.
So that was Fed expiration. So what's happened to me in options is I was right about the direction, but I didn't buy enough time. So people that were in Fed puts lost money, and then the day
Yeah.
after expiration, they would have had windfalls.
And then they collected on March OPEX is where we saw the reversal. That's no coincidence.
Okay, so a lot
And
of
then the
inflection
next peak,
points.
and then weekly OPEX, those calls were paid. See, this overshot to the downside,
Right.
and they spent time down here purchasing weekly options, and those paid. Now we're kind of in limbo, or well, the dust has settled. I'm glad you didn't have me on sooner, or like during the crash, or even ahead of it. I thought,
yeah,
the
the
market's going to hold
magnitude
up, and we're still
surprised
going to
me
be waiting
too.
for the crash.
Yeah,
But
yeah, I kept looking for more of a failing rally, and never happened. So
I mean, practically,
you weren't alone.
This is Australia. It's funny.
Okay.
I'm pointing at the screen. I'm so excited. I'm like, this. I've been watching this for a long time. You see this peak out into a broadening top.
Yeah.
In wave 5.
Yeah.
So I knew it was about to happen. Too bad I don't have any way to short Australia, or I mean, I was short SOX, as you probably know,
Okay.
and putting out the warning on the VIX.
And that's that's interesting because that barely took out the high, the
exactly,
A high,
yeah.
which was 07. Kind of like I don't know if the Russell took out 2007, 8 highs. It was another laggard, but
yeah. Well,
a
lot of sectors did not make new highs. Meanwhile, they were
trannies.
Market makes new highs was the headlines, and there was a lot of speculation seen. Where's another foreign market? I can show you that. I'll see Spain. That was set to collapse.
God, that was really weak.
It's been in a bear market for
since 08.
Since 08, yeah.
Yeah.
But you don't hear this. They don't report this. They report Trump trade fears or whatever. But meanwhile, the bond market's blowing up, and the repo market's blowing up, and the IMF is warning about corporate debt and REITs. That was another sector that was hit really hard. I mean, but all these, this was all set to collapse. And here's the Eurozone. Here's a good example of where they took it down. And I mean, like the criminals who control this market, and this was support, or supposed to be. And where did they take it down overnight? They took it below support. They took out everybody's
trap
stops.
people that were long.
You've seen that before.
Yeah.
And so I think that's about it. Italy, Brazil, Japan. This chart's interesting in that it looks like a downturned either wave 4 or wave A. I mean, it made new highs, but this could be a bearish wave A. We could see wave B, and then a much bigger collapse. So I'm going to be cautious going into the summer. I'd like to come back on in like 3 months. Maybe it'll resolve itself.
Oh, you got it.
Oh, here's the CAC. Yeah, this is the French CAC. So it made new highs. And this, again, looks like an extended wave 5. 1, 2, 3, 4, 5. And this is a complicated pattern. Most Elliott wavers don't really know much about it, but it looks like a zigzag.
Still showing the Nikkei.
Oh, no, this is the CAC.
Oh, okay. I show on the screen the Nikkei data.
Oh, let me see if I refresh my chart. Are you seeing the TMV now?
No, still it's stuck. So maybe you stop sharing and then reshare.
Okay.
That'll bring it up.
New share. Sure, we got the right one here. Did that fix it? How's it working now? Can you hear me? Uh-oh. You can probably hear me acting like an idiot, but I can't hear you. Let's see. Chat is on. Let me try. Should I do share?
Yeah, got you.
Oh, you got me.
Got you. Okay.
Okay, so you got that chart now?
Yep.
Okay. And we were just looking at another chart where I said, see where they took it down? Well, you see right here where they took the stop out.
Yeah.
And that's no coincidence. And
so let me ask you this. If you think we're going to see a new high in the U.S. markets, and you've shown European, will they just be failing rallies, or is there going to be any kind of move away from U.S. dollar denominated assets into maybe something in Europe or emerging?
I'm thinking maybe U.S. recovers, and well, we got the Fed has our back, and so money flows into U.S. markets, exits Europe. Maybe Europe collapses.
Okay.
You can see, well, I've gone to these 25, 30-year charts, and they've been so helpful because it used to be stock charts only went back 20 years. But if you set the start date and end date, you can go back 25, 30 years. Okay. You can see the trend. This is the Wilshire. Okay. And you can see it back up above support.
Yeah,
and back where it bounced off the green line, just like it has. I mean, it's amazing, these long-term charts.
Yeah, that green line is really nice line. Yeah, and that looks like a broadening top where we can make another new high there.
A new high. If this could be, well, this just looks like a pullback, like an ABC pullback.
Mm-hmm.
It looks like a broadening top. And then I could show you the same thing on the New York Stock Exchange. Probably even a better view.
Oh yeah, people used to trade the knife, but yeah. Okay. Wow. Okay. So it's only a 2. Yeah.
Exactly. Well, this is a lot of Elliott Wavers thought this pullback was wave 2, and we were off to the races. I don't know how they were thinking that, but now if you look at it, you can say, well, this is ABC, and this is 2. This was a short pullback, and I mean, you can see the monster trend on this, like a broadening top. I mean, it's possible we come all the way up here, but like I said, what is that on hyperinflation? Of course, there has to be a recovery. A lot of things have to happen, but I think this coronavirus thing blows over. We're already seeing fewer cases in New York.
Okay. All right. Well, okay, so it blows over, and
we're off to the races. Speculation comes.
Well, do you think that the markets could recover? I talk about this like in 08, 09, even though we had a low in the markets in 09, it took at least a year or 2 before the real economy started coming back. Markets can bottom well before economic growth begins again.
Yeah.
Right? Isn't that what happened back then?
Well, the market was rigged in 09, and I mean,
well, hasn't it always been rigged?
Yeah, and I think it's rigged now. And so I don't really, I mean, it'll take time for the investor to get comfortable buying up here, and then they'll be chasing performance again.
Yeah.
But I mean, when I was green back in 08, I traded the 08 crash and even called the bottom there. But then I got shaken out too soon on the rally, on the snapback rally, and that mistake wouldn't happen today. Oh, and it's not going to happen today. Unless we start seeing new lows, then and you can see this rally off the lows in 08 was huge.
Any view on currency at all? The dollar or euro or anything?
No, not really.
Okay, that's fine.
Probably
oil? Gold?
The best trade out of this whole volatile market was oil. Last week, I caught the bottom in oil.
Okay.
And
is it a bear market rally, or is that a low that's going to stand for quite some time?
Looks like a bear market rally. This is what it looks like on the USO.
Okay.
So I saw this as a bullish snapback rally in wave A, and then oversold into wave B,
and had an island,
powerful wave C.
You don't see those often. Down there at the end of March, gap down, gapped up, island bottom.
That was crazy.
Yeah.
Okay. And I was starting to get bullish energy, and then they pulled the rug out, so I got burned there. But I made up for it here because I was 2x long oil at like it was 2x long and 85% gains in 3 days.
Okay, yeah, that was amazing.
It was amazing. I wouldn't be chasing it here.
They've raised oil margins on futures contracts to like 200%. Also S&Ps too. So you like this ETF for way to trade energy.
Well, yeah, they shut down they liquidated the 3X funds, and that probably explains why.
Okay. Yeah, they're taking away markets from us now by increasing leverage and shutting down hybrid ETFs. They're starting to give us less flexibility as traders, and they certainly want, it seems like, to eliminate leverage as much as possible right now, which isn't that good for the markets because it means less volume. So
that's the wrong chart there. Oil, let's see. Oh yeah, the other one I wanted to show you was tech, because like I said, I was short SOX because I was expecting the big one.
Yeah.
And SOX S just didn't perform that well. I got out of that probably with a 30% gain or something. I stayed short into that OPEX, and then we saw the market gap down the next week. I thought, well, I got out too early because the market's crashing, but SOX and tech didn't really get hurt.
Yeah, look at that.
This is the NASDAQ 100.
Yeah,
and
because Microsoft, you could say, just had a normal pullback in this crash.
Yeah.
Okay.
It's all about FANGs, and I believe that was the plan. It's the only real market they've got.
Those are the ones that are going to lead the way. Don't try and buy value in this environment. Buy what has cash flow.
Yeah. It's so hard for me to chase what's been working. And when you look at a chart like this, and but as long as the trend is your friend, and
Mr. Mark,
stick with a trade.
There's nothing about the market that's your friend. All right. Anyway.
That's about right.
It was great. The markets, this is what I say. The markets are unforgiving, but we have to be to ourselves because we're all going to make mistakes. So you want to wrap it with one more look here and then tell people how they could follow you and what you're doing if you have a business
I'm on
model?
Twitter, but
you looking for followers or
not really?
Okay.
I've kind of given up on it. I'm like more into like warning investors, and that'd be a good chart. The Grizz chart. Well, here it is. So back around the time I started to see the bottom come in, I told investors get into this Grizzly fund, which is just you can probably buy this with your 401k. And then when we hit this top of this channel, I was like, okay, well, you can take off your hedge. And this was up, 25%?
Mm-hmm.
I mean, simple. I think I just find that like most traders, I get irritated. I block them. They're bullish when I'm bearish, and they're pestering me about oil for months. And then, just wait for me to pick the bottom. But it's too much distraction from what I'm doing to try to teach a bunch of new people. It reminds me of 08. Everybody was on the wrong side of the trade.
Yeah, you can't be a genius just owning the SPY and thinking that you really know the markets anymore.
Exactly, yeah.
Unless what you say happens. But I'm sure there's going to be a lot of jiggles on the way to new highs. It's not going to be an easy ride.
Definitely.
So Anthony, a pleasure having you. Good to talk to you again.
Thanks.
I think you were probably with us the first year. This is our 3rd year anniversary of
happy anniversary.
Thanks, man. Hold on. There's a champagne bottle. All right.
Nice.
Anyway,
Here's the last chart, oil.
All right,
So
right.
what is that, $35 on Brent crude?
Yeah.
I mean, it's possible it gets up above there and holds up until contract expiration, but I wouldn't be chasing it here.
You think 15 maybe? Under that line,
Oh,
possibly?
it could go well below that line. Yeah, we could see $10 oil.
All right.
So
okay.
It was a great run, but
for
yeah.
oil. Okay. Well, Anthony, I hope that you and your loved ones remain untouched. And it was great to have your looks here. Thanks for coming back out of the closet to share your work with us.
It was a pleasure.
Yeah, really. Good hunting, my trading warrior brother.
Okay, so talk to you.
Everyone, you could follow Anthony at 3X Traders on Twitter, even though he doesn't want you to.
You can follow my blog too. There's a lot of great information on the blog.
Oh, you have a blog?
Oh, yeah.
All right, well, why don't you show that?
3xtraders.com, show it.
Okay, yeah.
You know, it's easy to find.
Okay, 3xtraders.com for Anthony's thoughts and charts outside of Twitter. And that's a wrap, everyone, and see everyone for Turnaround Tuesday. Good hunting the rest of the day. Be careful. It's a full moon and tomorrow, and I'll see everyone for Turnaround Tuesday.
See you later. Thanks.
All right. Thanks again, Anthony. I'll see you a little later. All right, everyone. Don't just count your pips, count your blessings. We'll see everyone tomorrow. Don't forget to drop in for your shot to win a 1-month free subscription. We'll be giving them out every day this week. You're very welcome, Monica. Thank you. Thank you, Barry. Tio, adios.